Hi, I'm Keith McCullough. Welcome back. And I wanted to have a conversation right now with Chris Sommers, who runs Blue Pacific. He is the man on the bubble that is agriculture. He made a great short call here with us with Monsanto. He also made a great short call on Deere, albeit the Monsanto call has been a greater short call. But again, we want to go through why he thinks that this is the last bubble standing, the agricultural bubble. That is. So welcome back. Thanks for making
no problem.
For making some time.
Yep.
We can get pretty bearish, I think, the two of us together. So I want to maybe try to be kind of sanely bearish. I don't know
Sure.
if I can say that, which
Yeah.
is fundamental. We can go maybe all fundamental on people.
Yeah, that's what I think makes the most sense. Because if you look at the ag commodity prices themselves, they're actually down a lot in the last 2 years. But take a bigger step back and look at it in a 20 or 30 year context. Ag is really the last commodity where the prices are still 50 to 75% higher than before the whole commodity boom started in 2005.
Yep.
Corn's at $3.50 to $4. Historically, it averaged $2 to $2.50. Soybeans are currently trading in the 8s to 9s. Historically, it was closer to 5 to 6. So they're still at very elevated levels, even though they're down from the last few years. They're at elevated levels on an absolute basis looking historically.
Mm-hmm. Now, if you take a step back, a lot of our subscribers would at least subscribe to the belief that Bernanke created a lot of bubbles. You get this easy money construct. By 2011, we get the all-time high, as you know, in the CRB index, but shortly thereafter, we got the all-time high in food. And all this really ran concurrently with this gigantic and unprecedented amount of money printing. Of course, they would never call it that, but then you get all this overcapacity and all these levels of storytelling. You get a lot of people at a lot of major mutual funds that own Monsanto and Deere because they're big cap stocks. Would you agree with the central banks having a central role in this?
Yeah, well, I think there's a couple of things that kind of drove all of the commodity bubbles, and I think fundamentally the demand was very strong out of China in the last 10 years, but overlaying that with the central bank interventions globally, that leads to even higher elevated prices. It makes the bubble more extreme. It causes the overcapacity problems on the corrective side to probably be worse, because the capacity problems, if you think about having unlimited access to capital for several years to expand production, what that means if demand falls short of your long-term projections, it makes the downside of the bubble a lot worse, I think.
Mm-hmm. So you're sitting there looking, if you look at a bubble and literally, if you pull back the chart long enough, you'll say, wow, we're still 50 to 70% above where this all started. And that to me, I think most people can see. I mean, if you just have a time series of data and you know how to look at a price chart, which most sane human beings can do at that point, I think that's trivial. What's not trivial is seeing the amount of supply, the amount of leverage on that supply, the amount of financing. How would you attempt to summarize or simplify that?
Sure, and I think that's an important point. You shouldn't just look at the price, and the fact that the price today is 50 or 75% higher than the past could be irrelevant. You need to look at the fundamentals and look at the structure of the industry. And in the case of corn and soybeans, for example, stockpiles of corn today are higher than ever on an absolute basis and on a stocks to use basis. Soybean levels on an absolute basis are the highest ever. Ever in the history of mankind.
In the history of ever.
Yeah, I mean, over time you should expect stockpiles to get larger as population grows, so that's why we also use stocks to use ratio, which puts it in the context of the stockpiles relative to total demand. And in that context, soybeans are at record high levels. But what's the scariest, and why I think the bubble is about to really pop here, is if you look forward over the next 1 to 3 years, what the industry structure looks like and what the supply outlook is, it only worsens from here.
Well, that's the most interesting thing. If we have your corn stockpile chart, and I'm assuming this is a projection, the 2016, 2017. Is that a non-consensus projection, or is that baked in the cake? Is that how would you? Because somebody could say, wow, well, they're not going to be that high.
Right. So the 2016 estimates, the USDA had a conference in Virginia last week and put out their first projections for 2016. Okay. The 16 projections assume what the USDA said. The 17 projections basically just take 16 and say 17 will look like 16.
Because they're linear projections. They just anchor off what was in your
Correct. And with farming, what's different from agriculture than every other commodity, and why agriculture is actually the worst commodity industry structure of all of them.
That's a pretty big statement. I mean,
yeah, well, I can talk about the industry structure. So in agriculture, no single producer accounts for more than 0.1% of supply.
Wow.
If you look at energy, for example, you've got OPEC, which is a large component of supply. Even Exxon is 3% of total energy production. So you can have some sanity in the energy space. In the ag space, there is literally no control whatsoever, and you've got hundreds of thousands of farmers all over the place that are producing crops. And to compound the problem is, with agriculture, there's no upfront capital required to sustain production. In energy, if you don't spend the hundreds of billions of dollars this year looking for oil, we know next year that the total amount of oil will decline by 5 or 10%. In ag, it turns out that the yield on an acre of land tends to go up over time as seed improves and fertilization techniques improve, irrigation techniques improve, etc. So the long-term trend for ag is to have greater production, whereas with energy, if you don't contribute any capital, it'll decline. So the structure of agriculture is truly terrible, which is why the 80s bubble, 70s and 80s bubble in agriculture was such a severe downturn. In fact, the energy correction in the 80s, that kind of worked itself out over a few years. The agriculture bubble, the unwind took many years, and the government actually had to pay farmers to stop farming because they can't stop farming because they have a sunk cost and they need to use their equipment. You have land costs. It turns out that these farmers farm even if it doesn't make any money.
Well, I mean, I don't want to go off the rail with how new the equipment is and how productive the equipment is, but I mean, there was, as you've pointed out many times, there was a bubble in capacity, there's a bubble in equipment spending, it's all just one gigantic bubble. But is the point, your basic point, that it's easier for, to plant baby plant than it is to like drill baby drill? Like in this case, if you were to like look at the two, because at least a lot of people that we do business with absolutely and fundamentally believe that on the E&P side, for example, guys are going to drill.
Yes.
I mean, so would they, if they believe that, would they doubly believe, I guess, the premise?
Yeah, and that's a great point. And with energy, it is drill baby drill, and these guys will drill, but they got to go out and get money first. And fortunately for the E&P guys, despite the fact that prices are NPV negative on many wells, these guys are having no problem raising capital. I mean, it's just crazy, but that's the market we live in today. With ag, they actually don't even have to raise any money. They just plant baby plant, and they don't have to go to the capital markets, which is why it's even worse.
And there's so many people doing it.
Yeah, exactly.
Now, how does that? I mean, I want to get into soy, and I want to get into the dynamics by specific agricultural commodity. But first, I want to also ask how, just as a thread to that, how all the Latin American farmers think about that on a currency-adjusted basis.
So this is what will really impact the state of agriculture in the United States over the next few years. And the strength of the US dollar, if you think about domestic manufacturing being harmed by the strength of the US dollar, there is no industry that is more greatly impacted than agriculture. So in the last 12 months, negatively,
yes. This is exactly what happened in the 1980s.
Yes, in the last 12 months, the price of corn and soybeans for US farmers is down 10 to 20%. The next largest producer, other than North America, is Brazil and Argentina. In fact, Brazil and Argentina produce 50% more soybeans than the United States. If you're an American soybean farmer, you're looking at negative 10% margins this year at spot prices. Prices are down 15 to 20% from last year. You're still going to plant even though you know you're going to lose money because you're a farmer, that's what you do. In South America, the Brazilian real has depreciated 60 or 70%. The Argentina peso has been cut in half. If you're an Argentinian farmer, you can sell soybeans today for 70% more than you could a year ago. The American farmer is getting crushed, but it's pretty good for you. Brazil, same story, not quite as extreme as Argentina, but you combine those two factors, and while the United States will continue to plant, and the USDA has already said that this year we're actually going to increase corn and soybean plantings despite the fact both are negative margin. In South America, they're expanding production because times are still good down there.
Well, on that, I mean, so that's where what I'm really trying to fish for is, because I think you've dismissed the idea that stockpiles can't surprise on the downside. And again, using the metaphor that a lot of people are going to use, they're going to use oil and they're constantly looking for reductions in rig count, reduction in supply, tightening capacity. What I think I hear you're saying is that if you bring in the Argentine equation, specifically Argentina, I think is an interesting one because you have Macri has come in, he's lifted currency controls, he's actually lifted export controls, which is the biggest incentive. Could there be like a bigger surprise in stockpiles if baby plant finds its way to South America, particularly in Argentina?
Yeah, and I personally think there's a good chance we actually see this
very soon, in the next couple of months. Because it doesn't take long for them to catch up with. I mean, the new government in Argentina obviously isn't brand new, but it's relatively new. So what happens, the North American crop cycle is exactly opposite of the South American crop cycle. And so in March, Brazil starts to harvest, and in April, Argentina starts to harvest. Now, in the last couple of years under the prior regime in Argentina, farmers did not sell their soybeans onto the global market in anticipation of inflation and a weaker peso and a relaxation of export controls. When Macri took office, it's basically a closed economy. Yes, it's like Venezuela. Exactly, and so they anticipated what Macri did, and so Macri eliminated export tariffs on corn and wheat. He reduced it dramatically on soybeans, and of course the peso devalued. So now, Archer Daniel Midland's earnings call a few weeks ago, the CEO was talking about how there's this surplus pile of soybeans sitting in Argentina that's just waiting to flood the market. These farmers will need to sell in the next couple of months, and the prices are pretty good. U.S. farmers, meanwhile, are sitting on higher stockpiles than normal in the U.S. So, what happens if Argentina decides to try to get rid of a lot of these stockpiles ahead of the harvest in April? The next couple months could be pretty volatile in the soybean markets. I mean, that seems, A, it's behavioral, B, it's what farmers do, like you said. I mean, that's what they're in the business of doing. And C, you have a huge political change. I mean, Macri basically did this in 60 days. It was one of the most incredible, at least, pivots or phase transitions politically that the world's seen in modern times. So I think it'd be at a bare minimum, we'd have a lot of arrogance suggesting that we know exactly how that plays out, but we can't predict the behavior of farmers. On the global soybean stockpile chart, that one doesn't look as, well, first of all, it doesn't look as parabolic as the corn chart. Is that the point, that soy could actually go parabolic in supply terms? Yeah, in terms of the outlook, I'm actually more concerned about soybeans than corn. The outlook for both is bad, but with soybeans, it gets hit harder by the South American dynamic because South America is a significantly larger producer of soybeans than they are of corn. And so South America produces, as I said, 50% more soybeans than the United States. Combined, they're like probably 70% plus of the total soybean market. Really? Yeah, and then in corn, it's largely the United States, then China, and then South America. And so when you talk about the currency factor playing into this, you can see massive production growth in soybeans in the next couple of years, more than you would see it in corn. And that's what I think the market's not as focused on right now. But they're both, I think, both corn and soybean prices probably need to fall at least 20 to 25% from the current levels, just to try to reduce some supply out of the North American market. That'd be like a conservative estimate if you're just hinging on supply and falling demand, which are kind of two important things. But this, just as a point of process, like when you show this global soybean stockpile chart, do you have these for every country? Like, do we have good data on Argentina's local stockpile? Yeah, so the USDA puts out a monthly report, and they don't show every country, but they show the top 10 or top 15 countries. All the meaningful countries are shown. So would Argentina's be hockey sticking right now? Argentina's, I can tell you specifically exactly what it is because I track it. Because that's a real dynamic story. A lot of hedge fund managers are talking about Argentina. Argentina, for everyone who doesn't know, Argentina has been a great place to be invested ever since, on the equity side, ever since really the Macri government has taken over. I actually think it's a quite interesting story, again, when you go from a fascist regime and a closed economy. If you're wondering what Trump putting walls around the USA looks like, that's what it was. So again, net, this is an actual place where a lot of long-only managers and hedge fund managers have actually found some interesting returns. Whether or not the story there continues is left to be seen. But I think there's a lot of people that actually would be in sync with you on what's actually happening there in that market and the expansion of that market. Yeah. So Argentinian stockpiles in the last 4 years are up almost 60%. In the last year? In the last 3 to 4 years. So that, just eyeballing it, that's more than global stockpile rate of change growth. Okay. Yeah. Okay. That's a lot. Okay. And do you know what Argentina is as a percentage of the total soy stockpile? The total soy stockpile, they're about 40% of the ending stockpile this year. Wow. So it's significant. That's a great point. I'm glad you called that to my attention. Yeah, because if you're long Argentina, you're definitely long the Argentine farmer. Yeah. And
Definitely.
and most importantly, like Mocri's incentivizing them to, you know, the trade from a macro perspective that most people don't understand is that Mocri is basically saying, okay, look, we know that we have like 30% inflation. We're going to try to take it to 10. But in the meantime, we're not going to centrally plan or mandate 30% wage inflation. So if the farmers only have to pay their guys 15 to 20%, and they get that kind of 30+% pricing,
Yep.
they're going to start to make a lot more money, and they're going to plant, baby, plant. That's what they do with their money.
Yep.
You know, isn't that not?
And that's why my forecast for soybeans is actually worse than corn, and that's because of what you just mentioned. The Argentinian and Brazilian farm industry is heavily incented today to increase production even further.
Yeah.
And you're going, like, the incentives are to increase production even further into what is already the historically most oversupplied soybean market in history. So it's very hard to have an optimistic outlook on corn or soybeans at this point in time.
He's Chris Sommers. He runs Blue Pacific. I'm Keith McCullough. If you have any questions, you can find me on Twitter, and you can find Chris right here too.